Oh, I absolutely did. He was so plain spoken. It was extremely refreshing. He was asked during the press conference, what he was to make of the 3.4% projected out to 2020. And his answer simply was, I don't think that anybody can say right now what's really going to be happening 3 years from now. So I think the markets are in a state of deep confusion because there really isn't anything for them to translate from what Powell said in his press conference today. He literally is following through with actions from his words. And again, this was not Greenspan, this was not Bernanke, this was not Yellen. This was somebody who was speaking in very plain English.
So we saw a human being today instead of a Fed robot, if you will. Do you think we're going to get a press conference after every FOMC meeting now?
Well, that question was posed to him, and that's certainly something that I personally have been advocating for a very long time. If you consider the fact that Powell's counterparts internationally, the Bank of Japan, the Bank of England, the European Central Bank, none of their leaders get a free pass at every other meeting. And Powell said that he was not going to shock the markets today by sending that signal out because they would have interpreted it naturally as a tighter policy path, as a more aggressive tightening path. But he did end by saying he was thinking about it. So he's opened the door for there to be 8 live meetings a year instead of 4, which is, he's a practical man. Why would you waste taxpayer dollars and the market's time if every meeting was not going to be live? Jay Powell opened that door today.
Let's talk about the most important aspect of this meeting for investors, which is, of course, the forward trajectory and the dot plot, which appeared to take a more hawkish tilt. 3 more rate hikes remain the baseline for 2018, but it looked like a pretty close call for 4. What's your read on the current trajectory, and is 3 appropriate?
So close you said it right. You said it right. It was very close. At the December meeting, there were 10 out of 16 members of the Federal Open Market Committee who were opting for 4 rate hikes in 2018. At this meeting, there were 13 out of 15. You really are splitting hairs. And what Powell said in the subsequent press conference was that if the facts change, then the trajectory of rate hikes could also change. And that was really when we saw markets begin to come off their highs, because he was saying truly that the Fed is going to be data dependent going forward, and that if the data become stronger, then the Fed's tightening path will then increase.
If there is anything that we can learn from history, is that rising interest rates equal to lower stock prices. We're officially at the foundation of the new era going forward of an increasing interest rate environment. It was plainly stated today by Jay Powell that the era of rising interest rates is right on the horizon, and the speed of interest rate hikes is going to be determined by the upcoming economic data. So, if higher interest rates mean lower stock prices, well, why aren't the markets falling by 500 or 1,000 points today? Well, everybody expected the interest rate hike today. However, any future unplanned rate hikes could definitely take the markets down. So what is the one significant data that's going to be revealed to us soon that could create panic in the market? And the answer is the job report on April 6th is going to be closely watched. And today is March 21st, so we're not far from April the 6th. That is officially when the stock market could really tank and produce significant losses. Now, in the past, I have actually produced a video and I posted it about the potential correction of market crash right around April 6th. Now, also looking back in history, when some of these announcements do come out and when some of the data is presented, sometimes markets do not react logically. And what we've seen is the past, there is such a thing as what I call a delay effect. And what I mean by a delay effect, although the rising interest rate environment has never been more clear the markets are not dropping significantly, or at least not yet. The delay effect could officially postpone a significant drop in the market until April 6, or shortly after that. I would say within 2 weeks after April 6. So you still got time to profit from the significant drop in the stock market that it will take place relatively soon. If you'd like to know how to do that, visit marketcrash.money. Find out all the possibilities of a market stock crash in 2018, possible Bitcoin crash. More importantly, how you can take advantage of the upcoming crash before it takes advantage of you. If you've been potentially, or your financial resources been depleted in the crash of 2008, or maybe you have suffered some significant losses in the year of 2000 during the dot-com bubble, or maybe you remember things all the way back into 1987, and you're wondering, well, how do I avoid the same mistakes? How do I preserve my capital? How do I actually benefit from the market fall to where I'm not just protecting my resources and my capital? How do I actually profit? Because the truth is, if you look in the history, all fortunes, all significant fortunes were created in the stock market when the stock market reversed. And right now, we're faced with an opportunity of a lifetime when the markets are at all-time high, and they present an incredible opportunity of a trend reversal. So don't wait, take action now. And by the way, if you'd like to learn how similar exactly is the environment between 1987 crash, the pre-existing conditions, and compare it to the potential crash of 2018, visit one of the videos I just posted a couple of days ago that is titled Stock Market Crash 1987 versus Market Crash 2018. I believe you would be completely astounded by simple answers to key 11 questions and similarities between the environment in 1987 and the environment we're facing today in 2018. Again, if you're a new trader or an experienced trader looking to profit from this new market environment, because it has never been more clear that the environment is changing. We're exiting the environment, the period of the United States history where the interest rates have been artificially low for a significant amount of time, for many, many years. And now we're entering a new phase where interest rates are going to be continuously rising. So how do you profit? The same strategy has worked in the last 8, 9, 10 years is not going to be producing the same results. If you're looking for a new strategy, click right here, How to Profit. Schedule your consultation and take action now. Make 2018 your most profitable year by far. I'll catch you on the next video.